You're talking stocks with Nora the Stock Explorer.
Good morning, everybody. This is Nora, and I am here to hit you with some stock market slang, guys. Okay? These are terms that I use, and this is gonna be like a combination list. This is gonna be some tried and true basic stock market terms, but this is also going to be some stock market slang that you might hear when you are on some social media sites, when you're in some different groups, and you hear people saying these different things, and you're like, what do they mean by that? What are they talking about? It's going to the moon and things like that. Okay, so this is what we're going to do. We're going to go through a couple of those very common phrases that you're going to hear in the different groups. Now, before we get started, I just want to say thank you to all my lady traders. I was looking at the analytics, and 51% of my viewers are women. That is amazing. That is not the typical audience for stock market trading, so I'm very proud of you, very stoked, and very happy to see you here. If you are one of my lady traders, please leave a comment below and let me know where you're watching from. I understand this is worldwide, so you could be in Korea, you could be in the UK, you could be in Australia, okay? So if you are not in the US, also leave me a comment. Let me know where you're watching from, okay, guys? Let's get started. Alright, let's start with the basics. Now, I got my coffee because this is going to be a 20-item list, okay? I cut it off at 20. This is going to be the first of my stock market lingo videos. It's definitely not all-inclusive. There will be some lingo that I don't include. This is just cut off at the 20 mark because I don't want the video to go on too long. I want you guys to get value out of it and not get bored. Okay, so a stock, of course, owning a part of a company. A single stock represents a fractional ownership of a company. That's for the newbies, okay? Bullish means you believe the market is going up. They also refer to it as the bull market. Example, I am bullish on AMD stock, which, by the way, I actually am. When the market is green, you'll hear it's green, or futures are green. Those are predictions for the next day. Okay? Bearish means you believe the market is going down. The bear market. I'm bearish on Neo stock. When the market is red, okay? Next one, options. Now, this one I could go on and on and on about forever and ever and ever. And I'm going to do a separate video, and it can get complicated, but I'm going to try to point out a few things to kind of help you look at it in a very simplified way. Okay, guys? So, options are a contractual agreement between two parties, a contract to own 100 shares of a particular stock at a certain strike price. Okay, most of the time you will sell the option and not exercise it, although you always have the right to exercise it. The stock must exceed the break-even price, which you will see what that price is when you purchase the option. It'll say break even, so you'll know that before you even decide to put your money on the table, okay? You do not have to buy 100 shares. When you buy an option, whether it goes your way or not, okay, you don't have to buy 100 shares. It's a contract that represents 100 shares, okay? This was something I didn't understand at first, okay? So I just wanted to answer that question up front. You don't have to buy 100 shares, okay? It's a very common question on options. You can buy the option and sell it at a profit if the price exceeds your break-even price. In other words, if it goes your way, you're going to make money. If it doesn't, you can cut your losses, okay, and take a loss on that. All right, you never have to buy 100 shares. Like I just said, you can sell the option at any time the minute you buy it. Just understand, if you buy it and sell it on the same day, you will get 1 day trade strike on that option. If you forget the option, it will automatically sell on the date of expiration. Most likely, if you forgot about it, it's because it tanked and it's going to expire worthless. You cannot lose more than the price you paid, okay? Only risk what you can afford to lose. Now, if you're brand new to options, what I would recommend is buying an option that's relatively inexpensive. In other words, buy an option for a stock that maybe is trading under $5, okay? A call option is a bet that the stock will go up. A put option is a bet that the stock will go down, okay? Now, this next point is extremely important. 90% of options expire worthless. Options have decay, and the clock works against you by subtracting money for each day that you hold the option. Beginners should be very careful with option plays, okay? I would not recommend them if you've been trading for less than a year at the very minimum. I'm not recommending them at all, actually, but if you'd like to dabble, I would recommend going very conservative and far out on your expiration date to give it a chance to play out. If you want to practice, choose inexpensive options, ones that give yourself an extra 2 weeks to give the stock more time to play out, like I just said. So it has a chance, maybe if it took a fumble, okay, has a chance to get back up to where you need it to be, okay? Alright guys, now that's a very simplified overview. I'm going to do a completely separate video on options, but there you go. For a lot of people that were asking how they work, those are a few basics. Okay, your portfolio is a collection of stocks that you own. Very, very simple. I think of it like a folder with stocks inside that you own, or like a portfolio, like a little briefcase, like with your stocks inside, if you want to visualize it that way. A REIT, or real estate investment trust, means you are investing in real estate without having to own the properties, okay? Many REITs have dividends, okay? So those are something you might want to check out. Blue chip, a company with a history of financial strength, okay? A company with a large market cap, usually in the billions. A stable company that will likely not go out of business, okay? Examples are Coca-Cola, Johnson & Johnson, and Apple. Your Snapple Apple, all right? Next, online brokerage account. Okay, this is a brokerage that is linked to your bank account. All of these are going to ask you for your bank account information. That's how you transfer money back and forth, guys. Okay, this is going to allow you to buy stocks online, and they make it very, very simple to do so. Okay, examples are TD Ameritrade, Webull, and Charles Schwab. Okay, and there are many, many, many. I am not recommending these. These are just put here as an example. Personally, I use Webull, and I use Robinhood still, although I am not recommending any brokerage. You want to find out which one works best for you. Webull actually has the extended trading hours. You can start at 4 a.m. If you're interested in getting a Webull account, please check out my link below. S&P 500 is the 500 largest companies in America, an indicator on how well the largest companies are doing. S&P's down. Okay, our biggest companies are not doing so well. If it's up, then our big companies in America are doing great. All right, ticker symbol, the abbreviation for the stock on the stock market. You're going to want to learn your tickers of the stocks that you like to trade, okay? And if you're asking for advice from an experienced trader, they're going to want to know the ticker symbol, especially if it's not a well-known stock. Now, if it's Apple, they'll probably know that, but if it's like Knight Swift Transport or something, KNX, you're going to have to tell them, look, that's KNX, okay? All right, example, Apple is AAPL. All right? Dumping, when a stock is losing value fast and going down a large percentage in one day. That stock is dumping hard. Also, you can hear terms like it's diving, it's dipping, it's fading. They are all used the same way. The stock is going down. I tend to use the word tanking. That stock is tanking. Okay, there's many more. If you can think of some terminology, definitely put it in the comments section, and I will add it to my next video. Risk it for the biscuit. When you're taking a risky trade that has the possibility of paying off greatly. Dude, I'm gonna risk it for the biscuit on this one. Alright, I love saying that. Okay, pumping, a stock that's going up higher than expected. Tesla is pumping. Alright, looking juicy, a stock that looks like it's about to go up. Also, if you watch YouTube a lot, you know our boy Jack Spencer loves to use the word juicy. Hit that juicy red subscribe button. And guys, if you're watching this far and you haven't already subscribed to my channel, please hit my juicy red subscribe button. I appreciate you guys very much. Dividend stock, when a company pays some earnings to shareholders, and they don't have to do this, so this is like a little bonus, okay? Some people only trade dividend stocks because of that extra bonus. You must have held the stock before the ex-dividend date. Buy the stock a day before the ex-dividend date or the X date. I'm sorry for the noise. My one dog is chewing her bone and making tons of noise. Dividends can be paid monthly or quarterly depending on the stock, and the dividend can change or go away. There's been a lot of high-paying dividend stocks that completely took away their dividend. I did a video on this. I'm going to check that out in my list of videos. Always check periodically to see if your dividend stock has changed. This year, a lot of them have changed. To the moon. This is a common phrase meaning that a stock will go up to the moon or go up quickly in value. However, it is also used as a joke when the stock goes down quickly. Mooning means the stock went up dramatically. Yo, this stock is mooning. Okay? Again, it can be used sarcastically, like almost everything on planet Earth, right? Wow, that went to the moon. Okay, so just be aware that's where that terminology came from. There's a lot of terminology that has space references. You'll see the rocket emoji icon that also means to the moon. Okay, these are all kind of referencing to a stock going up. All right. Ripping, when a stock chart shows the price going up dramatically. Look, Apple's ripping. This is like when you see a sudden sharp increase in stock price, someone will be like, dude, such and such stock is ripping. Okay, that's what that means. Printing, when a stock is showing you a lot of profit in a short time, like a money printer. Another phrase is money printer go brr. And my t-shirt today, that is what it says. Money printer go brr. My friend in Capitalist Academy taught me that phrase. It cracks me up. Okay. Alright, taking an L, taking a loss. L, of course, the first letter in the word loss. I took an L on that stock. I took an L on that option. When someone says they're taking an L, they're taking a loss or cutting a loss. And sometimes that is the hardest lesson to learn, but the most beneficial if you're going to learn to trade another day. Know when to cut your losses and don't be emotional about it. You're not going to win every trade. Stocks don't always go up. Okay, next, smashed earnings. When a company reports quarterly earnings and they are much higher than estimated. Pinterest smashed earnings. Okay, now this is the end of my slideshow. Guys, thank you so much for coming by. I hope you enjoyed this list. If you haven't already, please like and subscribe and leave me a comment. I really appreciate it. I'm almost at 100 subs. I appreciate you guys so much. Have a great day. Peace.
Please like and subscribe. See you in the next video. Please like and subscribe. See you in the next video.